Yeah, okay, so we are live on YouTube. I'll be sending this one will start in the next 3 minutes from now. Let me first share the link to all of you. Let's share the link to all of you guys. Let's share the link to all of you guys. Okay, let's start our lesson and we shall start right away with the charts. Yeah, okay, so as I said, we are going to be running Euro correlation, Euro super correlation, agent session super entry, Fibonacci super entry, and basics of Forex. So let me start with some basics of Forex. In Forex, you need, if you're new to Forex, totally new, you need 3 applications: MetaTrader 5, MetaTrader 4, and any FBS or Exness blocker. You can download FBS or Exness blocker. Those are the most popular ones that you can trust for the start. And also other things beside the apps, you need to know the language. To know the language, you can use this book right here. Let's move this sheet. Read this book right here, Candlestick Trading Bible. Yeah, this one. You can open it and go through the introduction and stuff. Everything you need to know is in this book, Candlestick Trading Bible. If you need it, you text me on WhatsApp and I give it to you. Yeah, it has everything for the beginners. Yeah, let's continue. And the next thing you need to know as a beginner, you need to understand how these candles move. When I talk about candles, I mean these red and green candles. In Forex, we only have 2 types of movements: the down movements and the upper movements. The downer movements is when the market is moving, when it is moving down. Let's try to put this on full screen. And the market so this is the upper movement right here. As you can see, the market is moving upwards. Then right here the market is moving downwards. Okay, these things will write this tab. Those are the setups and other analysis that I made some time back. That's why you see them right there. So those are the 2 things you need to know as a beginner. The market moves down and up. So just need to know where the market is going to move. Is it going to move down or is it going to move up? That's the biggest problem in Forex. How to know where the market is moving? Is it moving up or is it moving down? That's the issue. Okay. So, and that's why I'm here to explain you how to understand where the market is going. So let's first go to euro correlation or euro super correlation. These euro currencies, this is euro JPY, as you can see up here in the corner, euro JPY. These little setups that you see here are the simple, say, okay. So the first part in this says, first go to 30-minute time frame. Let's look here. This is just a concept that we use in supply and demand. Today I'm going to teach about 3 concepts: the Fibonacci super entry, euro super entry, and then yeah, as I listed them in the group. So right here, first move this. This line that you are seeing right here, this one is the price when the market opened in New York Times. Right here down. This candlestick, this candlestick opened when the day. Okay, at this time is when the market opens every day. It opens at 00. Right time is right there down. Tuesday, 27th July. Yeah, right here. So the market opened here. This we mark the open of this candle with that longer line. After marking the open of the candle, then we count 20 pips upwards and 20 pips downwards. Why do we do this? We may use this 20 pips upwards. I want to explain why. So the pips are shown here. This is 96. So let's decrease to 20 pips. Let's decrease 20 pips. Then even the down one, 20 pips. Okay, right there. So when the market passes through, or when the market after the open, when it starts buying and then when it taps the highs of this, or when it moves 20 pips above, let me say when it moves 20 pips above, this market will likely move, retrace back a little bit, then it moves throughout the day, moving upwards, because okay, our main target here is waiting for the market to hit the highs 20 pips above or 20 pips below. If it hits 20 pips below, then we are expecting sales that in that particular day. So today, the last, let me see, when was this? This was Thursday. So on Thursday, the market moved 10 pips above. Then after moving 10 pips above, you can start buying it right here, or you can wait and find a setup in between this. Let me go to a 5-minute time frame to see, or we have a setup right there inside that chart. When is this? This is Friday. So let's go to Thursday. This is where we want to see our setup. This is right here. You can see the things are somehow large because I've decreased the time frame, and if you decrease the time frame, for the beginners, the time frame that I'm talking about is these candles. When this candle opens and then it closes, there's a period for this candle, or there's a period for this candle. Okay, when I say 5-minute time frame, I mean that this candle, every candle that you are seeing here, moved for only 5 minutes. And if I say 1 hour time frame, it means every candle that you are seeing on the chart has moved for 1 hour, then it closes. So this one moved for 5 minutes because right here we have 5, that is 5-minute time frame. 5 minutes, then it closed here. This one opened, 5 minutes closed here. This one opened, then it closed right here. This one opened like that. Okay, that's what I mean by time frames. Okay, I'll go through explaining you slowly. So this is the setup we had on the 5-minute time frame. The market moved upwards, then retraced, then moved upwards again. So we expect a retracement. I'm going to talk about the retracements on the Fibonacci spur entry, and then this was our zone. So the market came, tapped into it, then moved upwards. So the main effort on this is you wait for the market to hit the 20 pips above. After you count 20 pips from the open price. Right there you can see 00. That's open price. So you count 20 pips above. So wait, you get your any strategy that you use, as long as that strategy is telling you to buy somewhere in between here. So there's my strategy, supply and demand. It will tell me to buy right here because the market has made a value based value movement and also value based roll again. So this was a demand zone. So the market came back, tapped into it, then moved. Let me see. Let's go back to 30-minute time frame. Yeah, if you're watching this, don't leave because the video will be private. Yeah, after at the end. Let's go to the Thursday. Yeah, this is here. So the market, after tapping, let me put this back right there. The market, after tapping into the zone, it came back right here, as you can see. Came back, then tapped into the zone, and just like that, we had our entry. And then it moved for the full day. It moved 90. How many? Let's see. 90. This 100 pips above. So this setup got us 100 pips above. Yeah. So our main effort on this Euro super entry is you mark the opening price, then you mark 20 pips above or 20 pips below. Where the market moves first, if it sells and hits 20 pips below, that will indicate that that market will sell, will likely sell for that particular day. Let me go and get if I share these guys of Telegram, I'd forgotten them. Share them the link of the lesson. Okay, let's continue. So the next part is you check, and the next that is Euro JPY. That's for Euro JPY. Then for Euro AUD, it goes like this. It is somehow the same, but differently. It goes with NZD USD and Euro AUD. Okay. Let's first go. Let's put this above. Like this. If you are like this one is quite confusing, but should try to understand it. Okay, for this one, you need 2 charts of trading view. So what I usually do is I go to my next my other trading view account, and I get this other trading view because I want to put the NZD USD on the other part. Then I put also Euro AUD on the other part. That's the reason why I'm putting another trading view. Okay, it is displaying slowly, but I shall go for it. Because we only want NZD USD is right here. Let's go to for the full chart. Okay. Yeah, this is what I want mainly. I like dark mode mostly. If you don't like it, you can put a comment down below and I shall. Okay, this is NZD/USD, so this is what I wanted. Let's go to the back charts. This is what I want to show you. I did this analysis some time back, and it was working quite well. Okay, let's put this right here, and then we have also this one right here. Okay, so this is which day? Let me see. Tuesday. Let's move this. This is Tuesday, 11th July, and then I'm looking for 11th July, Tuesday. Yeah, a lot of analysis right here, but that's not what we're focusing on. We're focusing on today. This is 4th. Let me see. 9. Then we have 11 right here. Right here. Euro AUD. This is a 30-minute time frame. This is 1 hour. Let's put it on now. Okay. So this is the open. I need the open over. This is 10th July. I'm seeing those Monday 10th July. Yeah. So let me look for also Monday 10th July is where here. Then the open. Where's the open? Okay, where's the open? I'm going to show you what I want basically. When is this side? I think it is here. Yeah, I marked it. It is here. This is Monday. So what we need basically here is also to mark to count 10 pips above and 10 pips below. If you're a beginner, this will help you to understand where the market will likely to go in most cases. If it hits 20 pips above, it will go. I'm counting the pips right here. This is 20.4. Yeah. Then even below you count 20. Right there. Okay. There. So this one. So what's the main purpose on this? I was using this when I was using this before I started using supplement money, so it was helping me to get some good money from forex. And then I found out that you need to add on other concepts to help you. For it to work very well, you need to add on other concepts. Okay. So here, this is the open of Monday 10th July on NZD/USD right here. Then if you mark above 10 pips and then below 20 pips, okay, I'm going to explain to you. This is somehow crazy, but it works sometimes. Okay, if you buy, let me say this is Euro AUD, you buy Euro AUD and then at the same time you buy NZD USD at the open price. Okay, just buy them at once. This one, and then you press the stop loss 20 pips. If you buy, you press the stop loss 20 pips below. Then again you press the stop loss also here, 20 pips below. So for the TP, you put it 30 pips above on both, because you never know, you don't know which one is going to buy and which one is going to sell for that particular day. But just do that, just buy them every day. Just one of them you buy, one of the two you, okay, in Euro AUD you buy, put TP on 30 pips, then stop loss on 20 pips. Then here on NZD USD you buy it also, you put stop loss and on 20 pips below, then TP 10 pips above. Why do you do this? Because these currencies correlate in opposite sides. If this one is buying, this one will be selling. If this one is selling, this one will be buying. That's why you can see here it sold and this side it bought. At our main target, you can see here the market placed the stop loss and then you were out on the buy side of NZUSD. By this side, you were still running profits until you hit 30 pips, then that's your TP. So you have got only 10 pips in between these setups. If you check every day, you can get those 10 pips. The market hits the stop loss on the other trade of NZUSD, then hits the TP on Euro AUD. Yeah, you can make money like that. Yeah, for in the week, the market will give you those 10 pips like 5 times or 4 times. But the best way is to add on other concepts, like add on a strategy. I told you I was using this for when I was okay. So if you want to ask any question, you can leave a chat right here. You can see we have a chat right here. Yeah, you can leave a chat. In order to chat, you have to subscribe, then start chatting. That's the procedure. Subscribe, start chatting. Okay, send me a message and I see how I can help you. If the sound is not clear, leave this the message there down in the comments so that I can see how I can help. So that's the main effort on euro correlation. But that's not all. Have to add on other things to support you. So I'm going to add on Asian session super entry. Yeah, for the Asian session, basically we know very well that the Asian session. Okay, for the beginners, let me just not leave you behind. We have sessions in Forex. When I mean sessions, I mean time and periods. We have the Asian session, the London session, and the New York session. Basically, we focus on the London and then the New York. But for day traders, mostly they trade London. But to trade London, you need to understand how the Asian is moving. Okay. To go deep into the sessions, Asian session is the period on which the Asian continent in the okay. I think I need to go and watch a video that I posted about the sessions. That will work better. Let's just go deep into uh, the Asian session correlation. Sorry, the Asian session super entry. Yeah, because as you can see down here, we don't have time. Time is little, so for the Asian session, first of all, let me go to the recent charts. This is Euro AUD. Yeah. So to mark very well the Asian session, mostly we use indicators, and the indicator used is code for all forex sessions. Go to indicators, search it, put it in favorites so that you don't need to search it again. Put it right there. Yeah, so for this indicator, all you need to do, put it on the full screen. All you need to do is mark the candles that are in the yellow part. Every candle that is in the yellow part, just mark it. Yeah, we're going to try to see how we can combine the Asian session plus the other Euro correlation, and then we see how we can get a good setup, a valid one that can give us 100 pips plus. So we should mark all the candles in the yellow part of this. Every yellow part, you see that is the Asian session that happened in every particular day. Just mark every yellow part that you see right there. Let's mark this one. Okay. Let's mark. I'm using a rectangle for the beginners who are not understanding how I'm drawing these things. I'm using a rectangle shaped drawing. You can use it to mark your places where you want to mark. And also the app I'm using is called TradingView. You can go and download it on Play Store or Apple Store, whatever device you are using. Just go and download it. You only need to log in with your email address. That's all you need. Then you start getting super chats like this, and analysis is going to be easier for you. So after marking this yellow parts, you have marked every yellow part that you are seeing right here, right here, right here, every yellow part. The next thing you do is come and turn off the indicator so that you can get a clear chart. Yeah. So our main effort on this indicator is didn't do it very well right here. Did it for only okay. When the market hits the lows, you buy. If it hits the highs, you sell. That's the procedure of this Asian session. But last week, I don't know why, the market was moving really bad and not leaving any liquidity behind. That's why I've told you that here it hit the lows, but we had some zones right here, but the market didn't turn up to go upside. Even right here did the same, but here, because of this zone right here, it tried to move after hitting the highs, that tried to move down. Even here, after hitting the lows, tried to move up again. It hit the lows again, tried to move up, and here it hit the highs, it is still moving up. So our main effort on this, let me go to let's check. As I said, this particular week has not been good for traders using supply and demand. Don't know why this market was lagging so much. Let's try to mark right here the previous weak because this one is not favoring us. Yeah, because if you are risking well, you are still in profits. Remember we had some losses on Monday and Tuesday, then I knew that the week is not good, so I closed trading for the full week. You can see on this week the market is reacting very well. I'm going to show you why I'm saying that, because I'm seeing it hitting the highs and then respecting and moving back down. That's what we want. Even here did the same thing. Just mark the candles in the yellow part. Okay, then we remove the indicator to see the chart. This box that we have marked right here, you can see the market tapped into the downer side, then started buying. So also the Asian session, just you don't have to just buy it from nowhere. Have to have like a setup of supply and demand, or any strategy that you are using. Just add these concepts and you'll be good to go. Also, if you are finding this is just a note, if you are finding any setup using any strategy, doesn't matter if you're using ICT, support and resistance, any strategy or supply and demand, price action, this open price is always very good to know. You have to know the open price, that candle that opened when the market opened every particular day. In order to know that, you have to come here, put your trading view time in New York right here, UTC -4 New York. That's the time you have to put it in. If you don't put it there, I am afraid you have long charts, or time is wrong, and that will lead to why am I saying that this line is very good to know is the market always reacts so much on these lines, as you can see right here, right there, and the market came back to this line, did the same thing, going down. After approaching this line also, market came back, tapped into it. So this line is always working as a support and is resistance at the same time. So for the supply and demand traders, we had to have a setup zone, demand zone just below here, so that we can use this Asian session as our entry. So the next thing you can do, okay, it is like this. This is your setup, supply and demand, rally based rally. This is your open price. Just put and you count 10 pips above or below. Let's count 20 right there. Then you count 20 also above. I'm trying to combine the two concepts to help you understand. So after this market hitting, it didn't hit down here 20 pips down because it failed. Then it went and hit it above 20 pips. So here we were expecting to buy. Okay, our setup was saying rally based rally, then the demand zone is right here. So even if this market hits the sales, but while it is hitting the sales and also it is hitting the Asian session lows, that will indicate that the market is hitting the Asian session lows, and then we are expecting buys, and also hitting our demand zone. So we should wait for this to see the reaction of this chart, how it is going to react after hitting to the zone and after hitting to the lows of the Asian session. If the market starts buying, that will indicate very well that our setup has started working, and we start scaling in buys. If it hits the 30 pips above, that's another confirmation that this market will buy for the full day. So you add in more entries and hold until the market takes out this high, or until the market taps into this price, the open price of the recent day. Why? Your first TP should be here, because most cases this price line always works as resistance and support. It can work as a resistance, but then the market turns and starts selling. So your first TP is here, then your second is here. Why? Because the market has to take out this liquidity right here. For the beginners liquidity, the videos are down below. You can pass through them and understand what I mean by liquidity. Okay. Yeah, so that is for the what? That's for the Asian sessions for entry. So just wait for the market to hit the lows, then you buy, then you wait for it to hit the highs, then you sell. Even right here it happened, market hit the highs, started selling, hits the highs, start selling, hits the highs, start selling. Yeah, last week I don't know why it market hit the lows. This is the Asian session, this one, this big yeah, this one that I've marked. Market hits the lows, then you start buying. That's the procedure. But in order to work for you very well and you get profits every day, you need to add more confirmations. That's where we are going to add on another confirmation called the Fibonacci retracement per entry. Yeah, what is the Fibonacci? For the beginners, the Fibonacci is a tool that we use to count levels on which the market is likely to move. The Fibonacci, I have it right here, right there. Okay, so it's here, Fibonacci retracement. You can get it even this side, Fibonacci retracement, and other tools are also right here, a lot of them. Okay, so for the Fibonacci, we first just put it in space right here. If you want to get Fibonacci like this one, like this, when I say you want to get this one, like when I say you want to get the Fibonacci that is like this one of mine, I mean that the settings, I need to set it the same colors, the same whatever that you are seeing on mine. Have to go to settings, first put it in default, or first reset it. After resetting, put these points 0, you take it, 0.705 you tick, 0.886 you tick, 0.1 you tick, sorry, 1 not 0.1, 1 you tick, then 0.5 you tick, 0.79. After doing that, you can go down below and press OK, or you can put it in percents, then you press OK. Whatever you want. If you put it in percent, it will be in percentages. If you put it in values, it will still be in points. Okay, so right here, try doing like this. Can you see something like I want to show you this. These are the percents I'm talking about. This 100%, 88% on this level, 79% on that level, 70% on that level, 50% on that level, then 0% on that level. So our main effort is just to mark all these sorry, first move the Fibonacci. So after getting your setup like this one, you have your zone below, you have your Asian section above, so you're waiting for the market to hit the lows, The next thing to do is get a Fibonacci, place it right here like that. Okay, so this is 14th of July. There are a lot of charts. Let me first move this, and let me move this, our zone. So this market, this is the Asian session. So we wait for the market to hit the lows. Then we had our zone right here. We put it back because we need it. That candle right there. Okay. For the Fibonacci, you mark if we are in uptrends, we mark 100% on the lows, then 0% on the highs. I'm talking about these highs. If I'm talking about highs, I'm meaning this one right here, this one. When the market moved up, then started retracing, this is the high I'm talking about. 100% on the lows, then 0% at the highs. Let me first move the Fibonacci and put it again. You can see how I can put from down, just from down to this high. That's what you need to do. Just do that, just from the low to the high, just like that. So these percents, the use of these percents is when the market is retracing back to the zones, or to the demand zone or supply zone according to the setup, you always buy the market when it has retraced into the 88%, 79 or 70. Maybe clear on this. Are you seeing these percents right here? These 70, 79, 88. So in most cases, have to wait for this market to retrace back all the way down until it hits into the 70% or 79% or 88%, then you start buying it to the top. That's the procedure. So the super entry of the Fibonacci is buying it in between 70, let me mark this, in between 70 and 88%, in between there. That's where you have to buy it. In between those prices, you can buy. The Fibonacci says, okay, the rules of the Fibonacci says, and according to my strategy and what I teach in VIP, I teach them if the market hits the 50%, then you start considering buys. But for the golden zones of the Fibonacci are 70 to 88%. Those are the golden zones or super entry Fibonacci. Okay, that's where you are expecting this market to change direction and then start buying. Let's try to find another Asian session and see all it has set up. Okay, this one had no setup because at the top where it was buying and we were expecting to sell it above the highs, yet yes, it started selling, but there was no any candles that are showing us sales. That's why this had no setup. For this one, the same thing, had no setup. So if you're not seeing any setup on this currency euro AUD, you can go to other currencies. There are GBP, USD, every currency is there. You can check on them. For the Fibonacci, you can trade any currency as long as you know the strategy that you are using. Okay, Fibonacci works in every strategy. It works in it works in SMC, price action, support and resistance, and then supply and demand, and many more strategies it works and they use it. So have to learn it, the Fibonacci retracement. Yeah, let me go to lastly for the basics. For the basics, if you are here and you are new in Forex, what I know, if you are new and you are still watching this video, you are likely to become a Forex trader because you are seriously committed to this chart. Because I know most of them, they are off as I speak, because these things are boring, but everything, if you need money, you need to work for it. I need to work for it. Nothing is free. You put in time and you read what you really want in life. Okay. I also gave it time. I read this book. It has 168 pages, as you can see right here. 168. They are big pages, and for this book, this is the introduction of every Forex trader. If you are new to the game, need to read this book. Introduction 4 pages, overview 6 pages. Let's go to the what is the candlestick. That is number 11. So let's go to number 11. Okay, what is a candle? Japanese candlesticks are formed using the open, high, low, and close of the chosen time frame. Upper shadow, lower shadow. Okay, let me show you this. So this is the candle that I've been talking about. Those candles that I was saying that you mark this candle right here, you mark it right here. This is the body. These little things that we have been seeing on the candles. This is the wick. Let me show you that also. If you go back right here, those things that we are seeing down here, right there, those are the wicks that they're talking about. The body is this big green thing and this big red thing. That's the body. Let's go back to the book. Upper shadow, lower shadow. So they are calling it upper shadow in this book, but it is called a wick. In most forex traders call it a wick. Maybe for this forex trader who made this book, he called it a shadow. Okay. Lower shadow, upper shadow, lower shadow. So this is according to what I see. Close, this is the open, this is a buy candle, this is a green candle, and then this is a red candle. Why? Because the open is below and the close is above. When the market opens below and then it closes above, it means this market has bought. It has bought from where it opened until it closed above. This is the close. That's why I'm telling that this is a green candle, because green candles represent buying momentum. Okay, then red candles represent selling momentum. That's why I told you this is a sell candle, because its open is above and then the close below, because this market has started selling and up to right here. Okay. Yeah, you can give this video a like, give us a subscribe, and we give more videos like this. Okay, so that is the candle. So let me go back on page 1 to see what next, because I can't just go into these pages, they are a lot. I want to see what next that we can learn about. Candlestick patterns. I'm just looking for the next notes for the beginners. Candlestick patterns. So if you have this book, go through this. These are the candles. Every candle, particularly the engulfing bar candlestick, the candlestick pattern, the dragonfly candlestick. Every candle, go through it. Yeah. But if you want for me to teach you every candle and to simplify everything, and to get more lessons every day, you need to go for the VIP special lessons that I teach on a specific price or payment, yeah, which I call mentorship. Time frame and top-down analysis, trading strategies and tactics, the pin bar candlestick pattern strategies. Okay, that's not what we need, because trading the pin bar candle with a trend, no. Okay, I think that's the main issue. And also, if you don't know how to use MetaTrader, here's it, MetaTrader 5 on the PC. It is quite hard to use. I also don't use it so much, but you can use it. This is the chart on a MetaTrader of the PC. You can go and download it. Go to Google, search, download MetaTrader 5 for PC. It will give you the link and you download it. These are the chart right here. I don't know how to use it so much because I use that over a phone. Yeah. Okay. I go back to the. Let me go to the charts. Let me see what are you saying right here. On which time are we? So how can I link my trading view with my Exness? So you don't need to link your trading view with your Exness. You just need to analyze on trading view. Then and after analyzing on trading view, then you go to MetaTrader and you find the currency that you have been analyzing on trading view, then you trade it. Exness, you need to connect it to the MetaTrader. Then for trading view, just use trading view for analysis, only analysis. Okay. Education below, and I believe everyone here is the next mentor. Okay. If you want to chat, okay, thank you for your time. For today, we have closed. See you next time. Yeah. If you have any question, tap my WhatsApp. The phone number will be down in the description. Yeah. And the group link also will be down in the description. I'll tap them. They are not in there right now, but if I turn off this live, I'll put them right there so that you can tap them, chat with me on WhatsApp. Until next time, so good night to everyone.